Think about this. The total value of all companies on our stock exchange is roughly $2.3 trillion. But the total amount in superannuation funds now is closing in on $3.5 trillion. And right now, big super funds are flexing their muscles. Just look this week at Qantas and the massive vote against that executive pay deal. Look this week also at Brookfield's $20 billion takeover for Origin Energy and how one super fund, our biggest, Australian Super, said no and then could scuttle that whole deal. But the government's also legislating a new purpose for super, to build retirement incomes for Australians in an equitable and sustainable way. So what does all that mean? Does it change the way our big super funds invest in the future? Well, this week I sat down with Deanne Stewart, Chief Executive of our fifth biggest super fund, Aware Super, which has 1.1 million members and $170 billion worth of their funds.
Yeah, there's definitely a really important component in that objective of super, which is what the government's looking to enshrine in the legislation. Equitable is essentially saying, how do we get the superannuation system to be as fair and equitable across the working Australian population? So it's not working for one cohort and not another. It's not working for high net worths and not working for low income. And so that's really the thinking around equitable. Around sustainable, it's making sure that when you think about those tax advantages of the system, that is sustainable into the future. It also has another meaning in many ways, which is essentially the philosophy of making sure that companies or investments from the super system are sustainable into the future and can be sustainable for Australians when they look to retire.
You don't worry that it's code for increased taxes for some?
I think ultimately you're seeing essentially things like the $3 million cap. So in essence, that is essentially putting a cap on how much tax advantage you can get out of the system. So I think you will see changes over time. We would like to see actually much more on the low equities, the low income side. Ultimately today, to give you an example, 78% of the tax concessions from the super system go to men, 28% go to women. Why is that? Because men typically have higher incomes and get higher super balances because of those incomes, and women don't. So that's an example of making the system more equitable.
Okay, just a debating point there.
Yeah.
Don't lower income people have the age pension to fall back on?
So
aren't they supported there? So do they need extra support on top of that? Isn't it those middle income earners in particular that need more support because they're the ones ultimately who are trying to live off their own superannuation?
Totally. You've got a really good point there. The super system is there right alongside the age pension system. But what you do want, and once again you see it in their proposed objective of super, is you want dignity in retirement. So you don't want a super system that's just working for the affluent and the high net worth. You want it to work for those, even those on the age pension. Try living on the age pension. Ultimately, you want them to have dignity in retirement, and it's got to work for all working Australians.
Okay, so Aware Super has $170 billion worth of assets now. You're big, so therefore big superannuation funds, as we've seen in the past few weeks, can change the course of public companies. Is this something you're conscious of as the chief executive of a big super fund?
Look, I certainly think we are incredibly conscious of the role that we have as one of Australia's largest super funds here in Australia. When we engage with companies, what we're wanting to do is make sure ultimately their long-term performance is as strong as can be. And so that really is about what does make them an enduring and successful organisation. So for us, using our voting rights and being really good stewards is certainly a role we play, and you can certainly see that live in issues that we've got today, for example, like Qantas, where you can see the big super funds using their voting rights to actually make sure that they're providing great guidance towards the Qantas board so that they actually look to take action to make sure that it's enduring and a trusted brand into the long future.
Okay, go back to the Treasurer. Yeah. And as the Treasurer changes, if you like, tweaks the ideals of super, does that also perhaps mean that he's looking for superannuation funds, big funds like yours, to direct your capital towards socially important areas, building more housing, building out infrastructure, the energy transition?
Look, I think they'd certainly like that. If you think about where the government's at the moment, I mean, they are facing some wicked issues. If you think about housing affordability, you think about energy transition, you think about rising health and aged care costs, that is a really difficult set of circumstances for the government to deal with. And let's face it, they do not have the balance sheet to do all of that themselves. And so where they then naturally turn is, well, what's the role that private capital can play? And if you think about the rising importance of the systemic size of the super system at $3.5 trillion today, going to $6 trillion by 2030, I certainly think super funds have a huge role to play, provided it gives the best possible return, risk-return outcomes for our members.
Okay, so that's the key, isn't it? Because that's that is your directors, right? Let's go to your directors. Your directors have an obligation to act in the best interests of the members, which means that if investing in, I don't know, the energy transition's a great investment, thumbs up. Exactly. If it's not such a great investment, well, you don't do it.
Correct. And the reality is there's an intersection, right? There's a circle of all the great investment opportunities we could invest in both here in Australia and globally that have really good risk-return parameters. And then there's a whole circle of opportunities that have really positive impact, that help with the energy transition, help with housing affordability. And what you ideally want to do is, where's the intersection of those two things? That's really good returns for our members, but also has a really positive impact on the community and on some of these big social issues.
So does that mean maybe the government has to cut you some tax breaks to give you an incentive to invest in some of those areas where the returns might otherwise not be as high?
Yeah, we've certainly been engaging in the conversation with the government, as have other super funds and other institutional investors, on what could be the role of super funds and institutional investors in things like housing affordability and the energy transition. And there have been very open dialogues, but exactly to your point, for us to invest in things like the energy transition, they've got to work. And the types of investments that we would typically like is some really good consistency in that return versus huge volatility or uncertain policy frameworks. But also when we invest in companies, it's great to have really transparent disclosure. And so you may have seen, even in the news yesterday, the government's coming forward with a much greater onus for companies on things like disclosure and taxonomy, which we're hugely supportive of, because that helps us determine one company from another, which ones are transitioning well, what's performing well, and that really actually assists in terms of investments.
There's one other trend right now, and that is companies being taken off the stock market by private equity takeovers. Classic example would be Sydney Airport's taken over by a consortium, including super funds. Another one is Origin Energy right now, Brookfield coming in and having its own. But Australian Super, one of our biggest funds, having a say there. Now, this is important because if too many companies come off the stock market, you have fewer investment choices, and then maybe you have to go and make some direct investments of your own.
Yeah, ultimately, from a super fund's perspective, you want a really good blend of listed and unlisted, because ultimately it's that diversification that creates really good long-term returns. And that's ultimately, as a super fund, what you care the most about. But in terms of the ASX, you're right. I think for the first time for a couple of decades, the ASX has actually shrunk this year because you've had a series of takeovers, but you've also had a really low number of new IPOs coming through. So ultimately, you do want a flourishing ASX. You want, because ultimately they provide great liquidity, but they also provide really good daily pricing of what risk is in the portfolio. So we like it from that perspective, but we also have invested significantly in unlisted assets that provide really good stability in the portfolio, but also in this higher inflation environment, they're often inflation linked. So we like a combination of two that creates a really good return for our members.
Because that almost is in accord with where your members' demographics will be, and that is if they're going to be retiring in 20 years' time, 30 years' time, then you need investments that actually almost carry that same time horizon.
Correct. So the average age of our members that are Aware Super is about 46 years of age. And so ultimately they've probably got about 2 decades before they're retiring on average. And so those assets with that long-term horizon is absolutely a sweet spot for our super fund. But even when they're into retirement, it provides that really nice stability of income that members draw down to provide their income for retirement.
Okay, so is it their money? Or is
it is totally their money.
It's not the government's money, because you sometimes wonder whether it's the government's money, and they'd actually just, we'll let you do this, we won't let you do that. Do you think there's a sense of ownership amongst your members of their superannuation?
Oh, absolutely. And increasingly we're finding members much more engaged as you're seeing super balances rise as the system matures. And ultimately you want members to know it's their money, and we have a responsibility to really help members as much as possibly we can, because ultimately, as many members are heading into retirement, Many find it quite fearful and really lack confidence because it's their first time in their life where they don't actually have an income or a salary flowing in. So how do I set up that income for retirement, and how much money do I need? Those sorts of questions are totally on members' minds. So as a super fund, we've got a real responsibility to help our members on that side, together with obviously really strong returns.
Deanne Stewart, it's lovely to chat to you. Many thanks for your time.
Thanks, Ross.